Hey all, welcome to ShareTreck. This is Raj here. Friends, today we are going to talk about Caribou Biosciences. There has been a lot of comments in the comment section with the old Caribou Biosciences video. So obviously there's a lot of interest in Caribou Biosciences. I had dropped it off my radar because the share price became low and things were not looking that great. But I had a quick look at the annual report, the Q2 earnings report, and things are looking much better than what I had thought. So that's what I'm going to talk about in this video, a quick review of their Q2 2024 financial results and business updates. Let's get started. Welcome back, friends. Let us start off with the financials first. The cash position of Caribou was that it ended Q2 2024 with 311.8 million in cash and equivalents in marketable securities, and this is expected to fund the company's operation into the second half of 2026, extending their cash runway by at least 6 months compared to previous guidance. In order to do this, they have sacrificed some work, preclinical work on NK cells. Now, the company reported 3.5 million in revenue from licensing and collaboration, slightly down from 3.8 million in the same period, same quarter last year. And they increased their R&D expenses to 35.5 million, reflecting the advancement of clinical trials for their pipeline programs. And overall, Caribou reported a net loss of 37.7 million, up from 29.5 million in Q2 2023. In terms of their pipeline, Caribou is advancing 4 clinical stage programs focusing on hematologic malignancies and autoimmune diseases, with key data readouts expected in 2024 and 2025. CB010, which is an allogeneic CAR-T for B-cell non-Hodgkin's lymphoma, has shown promising early phase data as it was presented at ASCO 2024 meeting. And Caribou is enrolling patients into the ANTLER phase 1 trial with a pivotal phase 3 trial planned for H2 2025, and CB011, which is for multiple myeloma, and CB012 for acute myeloid leukemia, are both in phase 1 clinical trials, with initial data from CB011 expected by year-end 2024. So there are plenty of catalysts for year-end 2024. So that's the exciting part right now. And in terms of corporate developments, the company reduced its workforce by 12% to extend its cash runway. This is on top of the discontinuation of preclinical work on NK cells. And they have appointed Dr. Terry Laufer, an expert in autoimmune diseases, to their scientific advisory board, and that will help them with their autoimmune approaches for lupus. Now, looking ahead, Caribou plans to present key clinical data in 2024 and 2025 with significant milestones, including the initiation of pivotal phase 3 trial for CB010 and updates on its other CAR-T programs. All of this looks like we're going to get some catalyst in the last quarter of this year. And based on Caribou Biosciences Q2 2024 earnings release, I'm going to provide a further level of depth into my analysis. And I'm thinking that the overall health of Caribou Biosciences appears to be in a solid financial and strategic position, given that we are in a rate cut regime that is coming up, and particularly for a clinical stage biotech company. Their cash position seems strong, even though it is not in the billions of dollars like CRISPR Therapeutics, but based on their volume of pipeline and their activity and their operational expenses, there seems to be a reasonable amount of extended cash runway and progress across multiple programs in the pipeline. And this suggests that they are well equipped to advance their research and development efforts into the midterm future. However, there are some challenges typical of companies at this stage, including ongoing high R&D expenses and a widening net loss, which seems to be able to nibble off the cash runway if not managed very, very carefully. And the positive highlights are that the strong cash position of 311.8 million helps Caribou have an extended cash runway into the second half of 2026. And this kind of provides a financial buffer offer to continue its funding of its clinical trials and operation without the need for immediate capital infusion. The company is advancing 4 clinical stage programs with multiple data readouts expected in 2024. To me, it seems like there will be multiple catalysts in 2024 for the share price to bump up. And particularly noteworthy is CB010 program for B-cell Hodgkin's lymphoma, where early phase data has shown promising results, and the plan to initiate a pivotal phase 3 trial in second half of 2025 is in place if data remains positive. And if data remains positive, this could be a significant value driver. Here I want to take you to the press release detailing partial match providing greater efficacy, because I have to read the verbiage out there to explain to you the significance. So I'll be reading a few paragraphs here. So here I am in the press release, and I want to read to you about CB010, both for non-Hodgkin's lymphoma as well as for lupus. It's being used in 2 different conditions. Now, at ASCO, Caribou presented data on the first 46 patients enrolled in ANTLER. 3 dose levels were evaluated, that is 40 into 10 raised to 6, 80 into 10 raised to 6, and 120 into 10 raised to 6. So typically, dosage escalation is done to see which is the most effective dosage level which can be used for the next phase of clinical trials. And in this case, it was decided that they would use the 80 by 10 raised to 6 because that seems to be the best one. So in dose escalation, 16 patients with multiple subtypes of aggressive relapsed and refractory B-cell non-Hodgkin's lymphoma were enrolled, and in dose expansion, 30 patients with second-line B-cell lymphoma were enrolled. As of April 1, 2024, data cutoff date, the results demonstrated the following. CB010 was well tolerated. And a retrospective analysis of patients demonstrated that patients who received a dose of CB010 manufactured from a healthy donor who shared 4 or more matching human leukocyte antigen or HLA alleles with the patient, referred to as partial HLA matching, showed the potential for improved efficacy. And now they have taken this lesson, and what they are saying is that they are going to begin dosing of a cohort of approximately 22 LBCL patients to prospectively confirm that partial HLA matching may improve patient outcomes. And they are also doing the same thing with lupus for CB010. So friends, this means that there is going to be 2 levels of efficacy that are being checked by Caribou. The partial HLA matching is quite significant in my opinion because this allows them to have even more efficacy, and this allows them an ability to clear the hurdle of FDA phase 2 clearance in terms of efficacy because by default their therapy is giving decent results. But if they do partial HLA matching, that can give them even higher results. So they can have 2 levels of offerings if this gets approved. One would be a lower priced alternative where no HLA matching is being done. The other would be a bespoke approach where HLA matching would be done so that there's a partial HLA matching and even better outcome for lymphomas as well as for lupus. So that's what I'm looking forward to. So this is very exciting. I'm looking forward to more confirmatory data from their current studies with these 20 cohorts and with the cohorts in lupus. So that I think is very, very exciting about Caribou Biosciences. And their decision to reduce workforce and discontinue preclinical CAR-NK research activities reflects disciplined cost management, kind of doing a triage on what is the best place to put the money. And this has also helped them to liberate some amount of manpower, which reduces the overall cost of operation. This move helps Caribou focus its resources on advancing its most promising clinical programs, which is crucial for a company at this stage. And as I mentioned earlier, Dr. Terry Laufer, who is an autoimmune disease expert, is now on the scientific advisory board, and this adds valuable expertise as Caribou advances its autoimmune disease programs, particularly in lupus. Now, everything is not totally rosy. There are some negative aspects I have highlighted. One is the rising expenses in research and development, which has risen to 35.5 million, up from 26.5 million in the same period, same quarter last year. While this is expected as the company advances its pipeline, it contributes to the widening net loss, which increased to 37.7 million from 29.5 million. That's a matter of concern. The increasing net loss is a point of concern, although expected for a company in this phase of development. The growing losses underscore the importance of successful clinical outcomes and eventual commercialization, which needs to happen in order to justify these losses. Now, there is a slight decrease in revenue from licensing and collaborations, primarily due to the termination of the AbbVie collaboration. This could signal potential challenges in maintaining or growing revenue streams in the near term, unless we hear of other announcements like some big pharma tying up to replace the lost revenue from AbbVie. And in overall assessment, I would say Caribou is making substantial progress in its clinical program, supported by strong cash position and strategic focus on most promising therapies. However, the rising costs and growing net losses highlight the inherent risks and challenges faced by clinical stage biotech companies. The company's ability to deliver positive clinical data and managing expenses will be critical in determining its long-term success and ability to transition to clinical development and to commercialization. And I'll also like to add that they need to find a replacement for AbbVie so that they continue to get some kind of collaboration revenue. So that's how I would summarize Caribou Biosciences. Now, before we wind up, I want to have a look at the price action to let you know what I think I see here. So we had a gap down which was covered, and now we have come down systematically. We have a diagonal line of resistance which was proved before to be a support. I'm just going to mark this red so that we can put it in the right perspective. That's a line of resistance. We have resistance from all four exponential moving average. Momentum is still weak and below average, even though it's picking up moderately. MACD is also bearish, and Caribou is right now at 1.95. So things are not looking that great from the pricing perspective. And also after the earnings release, there has been just a little bit of consolidation out here, no major excitement. But I think some excitement is due by the end of this quarter. So I would suspect that we'll try to challenge this diagonal line of resistance closer to the end of this year, the last quarter. That's when I think we'll be challenging this and trying to move up based on the outcomes that we are expecting in late 2024 from various clinical trials. And if those data turn out to be positive, then I think we can see a little bit of respite for the Caribou stock. But right now, the market seems to have just brushed off this latest earnings release. So that's the way I look at it. And that brings me to the end of this video. And I hope you would be able to give me your feedback on Caribou Biosciences. Do you agree with my assessments? What are your thoughts? Please put it in the comment section so that I also get a feedback of what you are thinking. It's a two-way street. We are a retail investor channel. Neither you nor I know better than each other. So your feedback is always welcome. Thanks and have a great day. Bye for now.